Welcome back, dear traders. Let's discuss a new trading session, new statistics, and a new forecast. Major Wall Street indexes were trading mixed during the American pre-market. Faint efforts to recover were ruined by bears. Stock investors are looking forward to fresh statistics and a portion of corporate reports. Yesterday, the key stock indexes closed with the equal losses. The Dow Jones, the Nasdaq and the S&P 500 slipped 0.3%. The latter tightly approached the resistance at 4,400 points on Tuesday. However, today the index is drifting lower within the corridor between 4,360 and 4,430 points. The US stock market turned sour yesterday in the light of the publication of the inflation report. The annual rate of the US CPI accelerated to 8.5% in March from 7.9% a month ago. Wall Street declined moderately in response to the rate-hot CPI that surged to the highest level in the last 4 decades. The actual reading came in line with the expectations. The Federal Reserve received another widely argument to tighten monetary policy at the nearest meeting. Investors are already pricing in a rate hike by 50 basis points in May. Besides, they are adjusting their portfolios as analysts see a threat of looming recession. Today, the market found new arguments in favor of the hawkish Fed's policy. Traders got to know factory inflation data in the United States. Producer prices in the US rose 1.4% in months, faster than the expected 1.1% increase. The reading for March is the highest since December 2009. Factory inflation received a boost due to several components such as energy, diesel and aircraft fuel, gasoline and electricity. Obviously, the fresh metrics do not benefit the bullish trend in the stock market. The only hope for the market is corporate earnings reports. Top American banks are due to report later today. While Wall Street has got stuck at lows, the US dollar is flexing its muscles. Its index settled above 100 points, heading upwards. The expected corridor for the index is defined between 99.90 and 100.50 for today. Having conquered the highest level in 2 years, the US currency is extending its stunning rally. There are fundamentals for the greenback to turn lower. The recent macroeconomic data indicates the imminent rate hike in May. That's bullish for the US dollar. Besides, every speech of Fed officials props up the greenback. In the light of the fresh inflation data, Vice Chair Lyle Brainerd said that even if inflation cools down in the United States, the Fed would unlikely have a second thought. So the official funds rate is sure to increase by 50 basis points in May. Besides, the policymaker does not see the reason why the Fed should give up the idea of reducing the balance sheet by $95 billion. Such comments cemented market expectations for faster and sharper rate hikes. Now, a lot of analysts foresee the key interest rate at 3% by the third quarter. Such fundamentals are extremely beneficial for dollar-denominated assets. Investors are seeking shelter in the greenback due to the gridlock in the peace talks between Russia and Ukraine. The USD CAD pair traded at 1.2610 yesterday, and the firm US dollar outlines the impact of rising oil prices, so the currency pair is trading higher today, and analysts expect the pair to hold in the corridor between 1.2580 and 1.2700. Nevertheless, the loonie has good chance to gain ground, and the American trading hours. The Bank of Canada will unveil its policy decisions tonight, and the central bank is widely expected to increase the overnight target rate by half a percentage point to 1%, and this will provide the loonie with a short-term support, because the rate hike has been already factored in. So the USD CAD pair is set to trade upwards in the medium term. Bitcoin traded at nearly $39,939 on Tuesday. Today it might climb to $40,000 again, despite profess that Bitcoin could become one of the main wealth reserve assets, the digital token reveals a clear-cut correlation with the stock market. The number one crypto is unable to escape from the range between $39,000 and $40,000, and the outlook is still the same. Bitcoin is expected to trade sideways with the local attempts to rise to $41,000. However, technical indicators signal that the digital token will stick to the lower border of the border range between $36,400 and $40,000 in the medium term. To sum up, the stock market lacks drivers for optimism. Perhaps upbeat corporate reports or macroeconomic data will be the catalysts for growth. Retail sales data and a weekly update on unemployment claims are on tap on Thursday, and we will keep you informed on further market developments. See you tomorrow.